We have the market on a downward trend, and if you look at the daily movement, it's been falling back up to 1% a day. Pretty muted move coming through on Friday as well, and many saying it's in anticipation of full year numbers that are set to be released. What's sentiment like on the ground from your perspective?
Thank you, Alishia. That's been exactly it. Since the January rally, the market has lost about 6 basis points consistently on average, compared to 2010, the same period, where it gained about 17 basis points on average. Even though the weak gains have been, the weak losses have been declining week after week. So we expect that with the influx of company results coming in, the market could beat up a rally. Coming in through the news this morning have been activities on the banking sector. In particular, some of the CBN intervened banks are being acquired by private equity firms. Combining this with company results, we expect to reinstate a bull run very soon.
So how are you playing the game at this stage Soji? Because with 70% of companies holding December year ends, are you also sitting on the sidelines, or are you using the opportunity to buy on the dips?
Well, we're using the opportunity to buy on. We like a few of the banking stocks, Access Bank, Diamond, Zenith, First Bank. These have been on our stock picks for the year, and expecting some form of a good performance to beat up a rally. These are the stocks we're looking at. Let's
take a look at Access Bank here, because it's cropped up as a favorite on many traders' stock picks. But potential risk there is that it's currently in M&A talks to acquire one of the affected banks. And with that, it's exposed to execution and integration risk if it does go through with the transaction. To what extent does that pose a concern for you?
We don't believe it's so much of a threat. Access Bank has been able to maintain strong net interest margins along with low cost of funds. Taking up Intercontinental Bank with its expansive branch network should be able to help it capitalize on trade financing and also treasury operations where it's strong already. So we don't exactly see it as a major risk in the long term.
Let's touch on a player like Diamond Bank. I know that one of the points Stanbic Bank raised not so long ago is that they expect a significant reduction in the bank's loan loss provisions by the end of the full year this year, and that driven by an improvement in asset quality. But being highlighted is that this is a bank that has a very strong focus now on the retail sector and is pursuing that a little bit more aggressively.
Yes, the retail strategy seems to be paying off with Diamond Bank. Also, very high net interest margins there at about 10%. This retail strategy is being backed up by significant technology, which should allow it to minimize whatever default risks could come out in the retail sector. So we expect those numbers to come out very good for Diamond Bank.